Hi, before we get started, just a quick heads up. The Canadian Advisor Tech Expo is going to be taking place on November 14th to 17th between 12 and 5 p.m. Eastern Time, virtually online. It is the premier conference for advisors to learn more about technologies available to them and about transforming their digital practice. Please note that the previous ad before my podcast had the incorrect date. This is a correction. Hope to see you there. And now on to today's show. Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I brought on my semi-frequent guest host, Guy Anderson, to interview me for the 250th episode, believe it or not, of FinTech Impact. And basically brought him on because this was a good opportunity, as a few of you have asked me in the past, to talk about basically what I've learned and where I think we're going from this point on. So with that, I'm going to turn it over to Guy. Guy, thanks for taking the time.
Always happy to do it, Jason.
So yes, Guy, thanks for helping me, quote unquote, celebrate 250th episde of this. I don't even want to look up what year I started this in now, but it's crept up pretty quick.
Yeah, it's like 4.5 years. So 2018, I think you first started this, and first one went
four times.
Four times exactly.
Yeah, wow.
So you took the opportunity away from me. I wanted to congratulate you because enduring, first of all, even starting a podcast, but enduring for 250 episodes, you must have learned a lot over that time.
One would hope. One would hope by now that by osmosis alone, I would take in a bunch.
So tell me then, what have you learned? What's the biggest takeaway, say, from episode 1 to now, where you are now? What's the biggest takeaway that you've learned over 250 episodes?
How to sound more natural in a podcast. Look, that I think I entered into this with a lot more wide-eyed optimism than I did for how fast and how long and how fast some of these solutions were going to come and how much further along we would be. And what I've discovered is, we move at a certain pace in technology, and we move at a certain pace because, hey, it takes a while. It takes a while, and some of these problems are pretty big. So it's not surprising that we're not, looking back now, I think of myself as a little bit more naive back then. But I think, change happens slowly and then all at once, right? I'm sure if I went back and pulled myself from 4.5 years to today, that Jason would basically say, wow, you got so many more cool toys, but why are none of them speaking to each other the way they're supposed to be, right? So it would be impressed, but at the same time, not fully thinking, that fundamental issue is still not there.
Right. So the way that the fintechs talk to each other and interact just isn't there, and things haven't progressed as fast as you thought they would?
Well, in integrations, I would say I'll differ for different markets, right? So, for example, there's a lot of integrations in the U.S. market, but I would actually refer to a lot of those integrations as borderline superficial. They're not very deep. There's not a lot of deep exchange of data. It's you're getting some of the information you need, but maybe not in the most optimal form and not in the most actionable form, or you're getting limited amounts of it. So it's not quite as being able to do everything you would want to do necessarily. In Canada, we barely even started. It's still to this day. Our architecture was more dated than, as dated as the US. The difference is that they started on a journey of fixing it all probably 20 years before we did. So they're well ahead of us. But in Canada, very, very few systems talk to each other. And short of having shops to program to work with APIs and do it yourself, it's probably still a little well off.
So what are some of the trends that you're seeing now then?
Big trends that I'm seeing now. I think there's a couple of ways to look at this, right? So again, I'll contrast the US market versus elsewhere. The US market, everybody's got baseline technology, right? Hey, I've got a digital solution for just about everything I need. However, some of the bigger two issues here are, some of the bigger, more challenging issues still haven't been solved. There's a lack of, surprisingly, digital onboarding systems that exists in any country. So if I wanted to, as a vendor, a broker dealer, an RIA, or whatever it was, off the shelf, buy something that would work just by putting my credit card, and I can just start basically opening up accounts or whatever custodian I wanted to, that's not a thing, right? It's slowly becoming a thing right now. And there's a lot of complexity to that because there's a lot of complexity to data, and I get that. But, it's one of those things where I look at it and say, oh, come on, you solve this problem we're actually having. The other issue I would say, too, is that in the US, they've kind of gone a little too far, and now they're kind of pulling back a bit. What I mean by that is that everybody's got base level technology. Okay, great, cool, base level technology, but that's not the reason clients were dealing with you, right? It made your practice more efficient, but the over focus on it may have taken away from the humanity of it all and the servicing of it all. So, if you went too far and just focusing on digitizing and optimizing your process without focusing on how you can provide deeper, greater value to a client, you didn't do yourself a service in that regard. You may have more free time to do other stuff, but you're not really servicing your clients the way you should. And my friend Dennis Moseley Williams will often say that, efficiency is the enemy of experience. I'm not quite so blatantly anti-efficiency in that regard. It matters, but it only matters so much as that you reinvest that saved time into something that enhances the experience altogether. So you have that. In Canada, the trends are still more foundationally getting off the ground. In Europe, you look at the big trends are still towards, I would say, open banking protocols. They are further ahead on a lot of that stuff at least from a jurisdictional basis in terms of how they've done so by way of government, by way of law. So they're further ahead in that regard. And, I'm seeing around the world, especially in the developing markets, I'm seeing a lot of unique and interesting ways of trying to get more people access to financial services, which is enormously important. So we're talking about alternative methodologies for how they profile risk to give people loans and create accountability in these systems and stuff like that. So we're seeing a lot of novel ways or a lot of unique ways to try to build off of some of the stuff that came, 4.5 years ago.
Yeah, I make note of the fact you're saying the account opening process, the digitization of paperwork and such. I think you and I even listened to the same podcast even just a couple of weeks ago, how we were listening to this one RIA in the States, and they're still complaining that it took 3 days to open their accounts, primarily from a regulatory standpoint, or, just making sure things were done appropriately. But I think, like in Canada here, we can open accounts digitally within a day or half a day, even using some of our technology. So,
but some of the U.S. has that too. What I'm not talking about, look, there's some vendor specific things that some dealers have basically or some dealers, some custodians, or some TAMPs have come up with on their own. But is there a vendor that, like I said, as an RIA, I can go in, put my credit card information into, and then basically say, oh, this is my custodian, and let me link up my CRM, and now it works?
Right.
That doesn't exist.
No.
That doesn't exist. It's all very specific to that individual. And yes, I know you're at a firm yourself where you guys have digital onboarding. I've seen it. I think there's limitations to it, that there's some strengths and weaknesses, just like there are any system. But that ability for kind of a turnkey onboarding process ain't there.
No, agree. It's not there. It's getting there, but like you said at the outset, it's in process. So on that though, what are the challenges that you're seeing? What are the challenges you're seeing in the sector that perhaps are limiting the advance of some of the fintech uptakes?
A couple things. I think 3 places I'll pick on is all 3 parts of it. So first off, shortage of developers. Everyone I talk to can't get their hands on enough talent, or maybe the talent's not talented enough. And, I've said it before that I think that there is no way that we're going to meet the demand for developers in the future. The real play is to basically eliminate the need for developers at such a high level. And that's the implementation of no and low code platforms like Bubble and some of the other ones out there, where you don't necessarily need to learn how to write a line of code. You can just drag and drop stuff. And as long as you can understand the logic, you're a lot closer to it. So platforms that allow people to build apps and solutions without having to get down to base code. That's the long-term play. I think that is a trend I'm starting to see now being adopted in enterprises with certain unique tools in terms of, we have this platform now, it ties into all our data. We do this. This is our workflow for handling this in paper. How can we build that into the digital workflow and then just kind of steward it? So I think the bigger trend is down the road is that you're going to have fewer people doing heavy lifting, hopefully, and more people basically just being curators of that entire, this is how we get from point A to point B. This is why all this data is important. So that is going to happen as part of a no-code revolution I slowly see happening. The second impediment is just the fact that we are still dealing with systems that date back to the 50s, 60s, and 70s, and it drives me insane on a daily basis. If you had told someone in the 1960s that the mainframe computer they were installing would be in operation in 2020, they would have wondered what the hell went wrong along the way. And there is a principle I learned out, something called the Lindy principle. It is basically that the longer you depend on a system, the more likely you are to depend on it for a longer period of time. And that's because even though we are built off of these archaic systems, the support systems that sit on top of them, with which we sit on top of that, are enormous. And the problem is we have so much supporting it, the inefficiency of this, that to take that apart is an enormous task. It's not a matter of just taking it, swapping computers. So it is one of the single biggest bottlenecks is the inability to crack some of these things open, get that data out and put into something new. But I keep saying this, and yet meanwhile, they still keep on opening up accounts on 1960s technology every day. So fun. The last one, and I will say that this is dependent upon the jurisdiction. In the US, I do not see this as a problem. Places in Europe and Australia, I've seen as a problem. In Canada, it most certainly is. And that's the advisor's willingness to accept or adopt technology, the intermediary. I mean, I'm picking on advisors a lot because that's our focus, but the assumption that clients won't use something, it's astonishing. And more often than not, that assumption is rooted in the individual's general concerns or beliefs on technology. They never actually tested it. So end user adoption to date has not really been that big of a problem. It's more so the intermediary adoption. And then the other challenge, and the one I'll pick on for sure, is that I don't know that a lot of these institutions have people internal to them that can think at this level when it comes to how to digitally transform their businesses, and nor are the incentives designed to do that.
Right. And to your point about advisor taking up the technology, I'll tell you, we started using DocuSign 4 or 5 years ago now. And I'll tell you, even some of my older clients who are reluctant to try it or use it are big fans of it now. Absolutely big fans of it now. So it might take one visit with them to show them how to use it. But to your point, yeah, clients absolutely, when they're introduced to a certain technology, they embrace it. They like it. And it can, to your point earlier, it can actually help that relationship and help you have more meaningful conversation.
Well, I totally get it. I mean, you have to work on that experience where no one wants a new challenge thrown at them. They're not hiring us to basically make their lives difficult. They want to make it easy. So if it means sitting down with them and basically walking through them, or walking through it with them, that's what it takes. But it's more often than not, we assume that we know how people are going to react to things, and the answer is no. We're looking at that through our own biases.
So we just went through COVID. And there seemed to be, during COVID, a big uptake in technology. Netflix and all that were big examples where people were using streaming systems and that. Did you see an uptake in fintech adoption during COVID? And my follow-up question to that is, now that we're in this recessionary environment, seeing capital flows being reduced, are you seeing fintech companies starving for cash?
So two pieces. Yeah, I mean, technological adoption went through the roof during COVID. We all know that because, frankly, you had no choice. And I had more people inquiring about solutions in that period of time than ever, which is not surprising. So that makes perfect sense. Now, I think in many cases, some of these people took a massive step back afterwards. One of my favorite examples is insurance companies in Canada who went from digital delivery back to paper delivery after a certain period of time in the middle of the pandemic. And I was just like, you've got to be kidding me. So it's hard to teach an old dog new tricks sometimes. Now, as for what's happening going forward in terms of funding, absolutely. Look, first off, anyone who says that venture capital or private equity markets are not correlated with the general market is full of it. We're seeing massive pullbacks in funding. I've known companies that get starved out of it, and some unfortunately to shutter in the last little while because of it. And it's not a merit of their technology. It's just sometimes you get to the 11th hour and you had a deal worked out, but now your funder can't make those capital calls, and it's done. It's over. You may not have enough time. So it's problematic. In fact, the other thing is that there was an entire sector of the economy that scaled enormously because of COVID, right? So I'll point to the online trading platforms like Robinhood in the US and Wealthsimple in Canada, where demand for these, because the usage, we were all sitting at home, people started playing and YOLOing and doing all kinds of stuff. But even companies like Shopify, right, where demand for their services just skyrocketed, and it was not going to stay at that level. Now, as a company, when you're venture funded and you have, or you're, on the publicly traded markets, what do? Do you say no to that business and have it go somewhere else, or do you continue to scale your business? Well, it's a tough choice, and they scaled their businesses, and their stock prices speak to it right now. At the end of the day, that all dropped off. They may have capitalized for a short period of time, but they're all suffering for it now.
Right? Are any of the ones that you've interviewed in the last little while, do you see any major success stories in the last 250 episodes?
Yeah, well, now ask me to pick which one's done the best. I mean, it's hard to say. I think every financial planning software I interviewed, with the exception of Conquest, has sold. So they've all had exits. There's been a lot of exits. So I've been happy for the people who've basically done that. Conquest is, which I am on the advisory board for now, or at least a feedback board, not quite an advisory board, is kicking butt. That was one of the more exciting things I've seen in years. So yeah, I mean, I've interviewed a lot of people. There's over 250 episodes now, actually more in the can. And, there's been a lot that have just climbed the mountain, and a bunch of that basically cashed out. And so it's hard to pick, but those ones stick in my head. Anyone who's exited has been, I'd say, out of the 200, and let's call it, I probably, not counting the panel discussions and everything else, probably call it 220, 230 episodes that featured a specific company. I'd say that we've probably seen at least a good 30 exits, which more, hats off to those people, right? Great. We've seen some closures, unfortunately, some things that did not take flight the way they're supposed to, unfortunately, but there's been a lot of M&A activity and a lot of people benefit from it. And a lot of these companies have now become household names in the world, and other ones who basically are becoming household names within the sectors that they are servicing.
So I may have asked this question in a different manner a second ago, but I'm going to ask it this way differently now. What are some of the biggest surprises you've seen in the last 250 episodes?
Good question. So biggest surprises, I think, again, I'll go back to saying that we're not as far along as I would have thought we would be, but that's fine. That's my naivety. Surprises, there's only been a couple of times where, and we do this at the end of the year when we do our year in review show, where I kind of say, like, here's the most impressive technology I've seen this year. There's been a couple that have almost broken my view of how things work. So every now and then I get a paradigm changing technology that shows up. I think the Cinci, with the advent of data fabric as a solution for how you run your data systems and communication, or data management, that one kind of broke my brain. Like, that is everything I knew about how you would basically control the flow of data and manage systems was just basically rewritten by watching that. I think, again, I'll go back and mention Conquest. First time I saw them in person and they basically demoed for me, my exact words were, "Shut up and take my money." It was a solution that I contemplated. What would a financial planning software that was powered by artificial intelligence and basically made things super easy look like? And what they showed me was better than I had imagined. So more user-friendly and approachable than I had imagined. So you have that. You have a number of other technologies, I think, that I'd say that those are the big ones. I think some of the stuff that's actually excited me more than the big kind of paradigm changing stuff, quite honestly, is some of the more basic stuff that's been, like, oh, this is such a novel, simple thing that really needs to be done. Like, why isn't this being done already? And there's a lot of power to this. So some of the, I'll give you 3 simple examples. More recently, Hubly. So simply financial advisor checklists and practice management systems. Frankly, just making sure that you've got a repeatable checklist system for how you're going to implement any part of your process. Taking Asana essentially and making it for financial advisors. I'm like, yes, this makes perfect sense. And you have a library that basically has these best practices or these templates to start with. Fantastic. Something as simple as FP Pathfinders for just flowcharts on how to basically make a decision and or to basically confirm that the planning solution you're making is solid. That is foundationally fantastic. Nudge, a company that basically literally hugged the client to death and just poked them a certain ways to make sure that they are replying to something or doing something or basically executing the way they should. I think that, some of the more, like I said, some of the more interesting, fascinating stuff that I would love has just been, oh, wow, this is such a simple implementation of this, but it's a problem that's real. I mean, just earlier before this recording, I was catching up with the founder of Estate Planner. It is primarily a legal software for composing wills, but on the front end, it has this drag and drop interface for building an estate plan. And there hasn't been a single client I've used it with who wasn't like, at some point mid through, wow, this is really cool, right? Like, it made the concept of estate planning and figuring out who's getting what approachable and visible and like, so those very simple things. So you don't have to reinvent an industry or reinvent a technology or do something paradigm shifting. Those are exciting and fantastic and great. But some of the simpler stuff has just been fantastic because they deal with such straightforward problems.
Fantastic. Yeah, I've got a colleague who's actually building something very much like that in the mortgage business, where you can where all the steps and processes are automated and nudges the client along the way, and the reporting system is pretty impressive. The user interface is really friendly. So I'm really, really excited to see that thing come to market as well.
Well, I'm happy to chat with him when he's ready to go. But I think it's funny. There was a tweet the other day, I can't remember who said it, where it was, I think it was Stephanie Bogan, but it was something to the effect of like getting tired of seeing these other fascinating technologies everybody wants us to look at when the fundamental problems haven't been solved. And it's like, exactly, right? Like and I see this behavior from institutions all the time where it's like, oh, look, look what we gave you. We just got you access to this thing that does this wonderful stuff. It's like, that's fine. But what about the core problem you still have not solved? And too often, I think the focus, a lot of institutions will often focus on, we can't fix that core problem. Let's just deal with other stuff, right? And I think that's the wrong way to look at things. We have to focus on bigger core solutions. I mean, otherwise, this is why we're sitting here without a platform for onboarding that would work across custodians around the world. Like it's data mapping, it's a workflow, it's potentially real time account opening. But I know it's complex because there's a lot of different variables that go into it, but the fact that it hasn't been cracked, come on.
So it sounds like you're going down the path there of open banking, and I didn't want to open another raw wound, but what are your thoughts on the advancement of open banking so far since your 5-part series a year and a half ago?
So my 5-part series on open banking a year and a half ago, which, by the way, as I've referenced it before, is depressing enough both on air and off air, the country I live in, that I want to drink afterwards. So let's talk about development. So development, I think everything's rolling along in Europe and the US as it's expected. I mean, the US is largely taking a kind of free market approach to it. And you're seeing that stuff get out there. Now there's more. I'd say that the good news is that there's some good positive changes there in that increasing requirements for SEC companies to use SOC 2 compliance. So security is going to go up on some of this stuff. I think there's more scrutiny, and there's been lawsuits about the use of that data when it's done when it's used inappropriately or used for sources that are not really pertaining to the original reason it was extracted. So you have that. You have the European situation where they continue to roll on through basically regulatory engagement. So the regulatory approach first, and that continues. They're continuing to slowly build out those systems. So it's happening. This is one of those ones where the pot is slowly boiling on the frog, and one day they'll get there. Meanwhile, in Canada, we released that paper on our open banking framework, and I started reading it, and I stopped reading it very quickly. And it came down to, it's very simple. The timelines set out were completely unrealistic. What have we seen? I mean, we've seen very little. And I mean, you're privy to conversations that I know about where people internal to major financial institutions have commented about the fact that, like, oh yeah, we just can't figure out how we're going to make a lot of money off of this. And it's like, no. Let's go back to the fundamental flaw of the way you're looking at this. You're basically, that is my data. And now you're arguing about how you're going to basically give it to me. That is spiteful. And that is wrong. But you know what? They still, short of an act of law that says it's not yours, it's the client's, which, I mean, technically it sort of exists under PEPIDA in Canada, and they're going to fight it. They're going to fight it because it's an advantage to the large institutions that have it. So am I confident in it, in how it's going? I think it depends on what country we're looking at.
Less so for the one that we live in, though.
Every time.
Yeah. I was going to bring up that conversation about that conversation I had with the compliance guy who confessed to me that, they're looking at ways to monetize open banking. And I was so furious. I go, that's my data. That's my information. And they're looking to sell it back to me. Anyway, so I think we both feel the same way on that. And
well, I mean, here's what the thing is going to happen is they're not going to sell it back to you. What they're going to do is they're going to try to figure out a way to monetize it through the companies they're giving it to, which is going to basically come back to you through fees in those companies. So it's just, it's ridiculous. It is astonishing to believe that the records of where I spend my money are something they think belongs to them. Bizarre and just absurd.
Okay, so we're seeing some trends in the market, in fintech specifically, but fintech is a broad umbrella. Are there any trends that you're seeing within fintech that are faster, outpacing the others? Like, say, for example, peer-to-peer lending, or anything else that you see is moving faster than other segments of fintech?
Well, I mean, it ebbs and flows. Depends on the period we're talking about. I mean, we're definitely done with the robo-advisor growth stage. I mean, like, that's kind of plateaued. So that was one example. We're done with the crypto hype cycle for now. It'll probably come back at some other point. We're done with the day trading cycle, and it looks, and knock on wood, hopefully, it looks like we might be slowly losing the buy now, pay later phenomenon is slowing down. You can always judge what's going on based on the number of emails that hits my inbox and what these people are pitching. So I've noticed a drop off in all of those. Is there anything picking up speed right now? No, I think we might be, unfortunately, as a sign of the times, I've seen maybe what might be an early indicator, which is a debt management tool or debt options tool, for example, that will help you refinance these things, like your debts, or better monitor them. I think that may be a sign of the times of where we're heading. But in general, there's no, again, these are all fits and spurts, right? They all have their natural growth cycle where they go really fast, and then they hit a natural market level and they plateau. If anything, I think that a lot of when I started this 4.5 years ago, we were in, fintech was still a relatively new term, and we were in a big hype cycle at the time. And I was seeing solutions left, right, and center, and novel things and different ideas. I feel like that's slowed down. I feel like it's slowed down. We've hit a maturity plateau at this point, and that's not a bad thing, right? It's not a bad thing. These companies are maturing. They're consolidating. Some of them shutting down. They're coming to reality on their valuations. They're being forced to develop actual viable businesses. There's still growth there. It's just not the same rate it was before. I mean, when you're starting with, from the number 1, going to 2 is 100% growth rate, right? Going to 10 is 1,000% growth rate. So it's easier to have very impressive numbers in that regard. But overall, no. Right now, again, maybe we're in the early early stage of the debt piece, but like I said, prior to that, just recently, it was unfortunately, and it really peaked during the online marketing, online shopping piece that happened during COVID, which was the buy now, pay laters, which frankly, I got all kinds of issues with that. Although even Apple's got into that business now.
Yeah. What was the Adyen? Is that the one that's the primary one? I think
there's so many Afterpay and
Afterpay.
Yeah, like it's all over the place.
Well, Afterpay was an Australian firm that got acquired, right?
By Stripe, and I think if I'm correct, Stripe is now worth less than what they pay, or worth about the same they paid for Afterpay altogether.
Right.
Ouch.
Yeah. Well. Okay. So here we are, 250 episodes in. What sort of trends do you see in the space? Call it next 500 episodes or the next 2,500, or so where are we now?
2,500 episomes. My God.
Oh, sorry. We're at 250. Yeah. Where do you see this at your 500?
Okay. So where am I at episode 500? I'm older. That's the only thing I can guarantee. Everything else is hypothesis, and frankly, they're likely to all be wrong. I mean, you always, if you want to prove yourself wrong, just predict the future, and this will serve as a time capsule, just how wrong I am. Okay, so where do I think we'll be in 4.5 years? Still in 1960s technology, unfortunately. I mean, I'm waving the white flag, man. I'm waving the white flag. I don't know what it's going to take, quite honestly. And just to tell you, the number of vendors that come on the podcast and talked about how their technology is going to extend the life of some of these systems, I'm saying to myself, like, stop beating a dead horse. My God, this is brutal. So you have that. Where do I see us in 4.5 years? I think that by then, a lot of the companies I interviewed will be approaching 10 years of life early, the ones I've interviewed early on, right? So I think that you're going to see, let's pick a sub-industry, right? So look at the robos and what they're doing. I think they're going to be much more mature financial institutions that look more similar to online financial institutions. They started with investment. They're going to be basically dealing with, if they're not already, they're going to be dealing with mortgages probably. They're going to be dealing with other banking sector verticals, either through acquisition or expansion, and just basically become mature online banks over time, but with a heavy customer-centric view of the universe, with a model that is not perceived to be as exploitative as basically banking is. If they do start doing that, they're going to lose their soul, and that's going to cost them their client base. So that's one of them. I think we're starting to see, and I mentioned this in the trends, I'm seeing more and more light implementations of artificial intelligence. I think we're going to see a lot more of that going forward. Absolutely. The proliferation of those tools is going to become more important, because one of the other things we're seeing, because if open banking continues to slowly take hold, is what we'll call a fractionalization or a fracturing of financial services. What I mean by that is, look at how many institutions now provide some form of financial servicing. So buy now, pay later is a perfect example. I spoke at a conference recently. I went to, I think it was the Lush website. So this is this is a company in Canada that basically makes things like bath bombs and other skincare products and whatever. And I just wanted to, because I did this over Christmas and was shocked by it. I put one $5 bath bomb in the cart, and I was given the option to pay for it in 5 easy payments. Right. So the reality is, even a company like Lush is offering financialization through a third party vendor. Sure. So the reality is that we are going to see more and more businesses look at, okay, we have their trust. How do we provide solutions around money or something similar to it? I think it was last week, Amazon announced in the UK that they're getting into the P&C business. So that's a big, big threat to a lot of companies. You see, the Starbucks is arguably the largest unregulated bank in the world. The amount of money they hold on to for third parties is enormous, to the point where there's spillage amounts in the, I think, tens of millions, if not hundreds of millions a year that they get to keep. Start thinking about what would happen if these institutions, instead of basically just holding on to your money, started rewarding you. Now, maybe they can't legally pay interest because they're not banks, but what if instead I got free stars for keeping money on deposit with Starbucks? What if that sort of model was followed by any number of institutions that have loyalty cards, where, you're retaining this deferred amount of money on our systems? Well, we're going to continue to endorse and continue to encourage you to leave it here, because we'll reward you, and that'll hopefully lead to more deferred funds leaving left here. So I really see a world where money is going to be, or decisions with money are going to be minute and everywhere. The challenge is that this is a cognitive burden on humanity. We don't want to deal with 1,000,001 small decisions around financing. I don't want to go buy a sandwich and have to decide if I'm going to pay for it over 5 easy installments. But this is where artificial intelligence can come in, where I might have my money. If you picture an AI solution built into your Apple device or whatever it might be, that basically builds off what Apple's done so far, but utilizes an open platform for third-party banking. So, for example, I've got $10,000 on deposit in case of emergencies in my bank account. I'm earning whatever percentage on it. Oh, look, that other bank over there just opened up and they're paying 0.25% higher. Oh, it's too much money. It's too much trouble for me to move for that small amount of money. Why would I do this? It's too much work. What if the artificial intelligence was able to ping that API, open the account, and transfer the money automatically? Do I really care? Do I really care what financial institution I'm dealing with as long as I'm seeing it all in one place? So that's the power. That's what I think is now that's a lot. I think it's longer than 4.5 years out. But this entire open banking fragmenting of finance and innovation that's happening everywhere is going to create an increased cognitive burden, and that's going to basically and everybody's going to want to get into it because there's some sort of skim to be made there. Now, the solution to that is it all has to be centralized afterwards. And I think that your mobile device is your personal device for doing that. And you're already seeing Apple specifically get into slowly becoming a financial institution. I mean, you look at it, they started off with, just basically put your credit cards in here. Then it was, by the way, you can leave cash on this card for deposit. Oh, by the way, we now have a credit card. By the way, now we also have buy now, pay later financing. They just keep on slowly encroaching into that realm. So the world is highly fragmented, yet concentrated and optimized around you. And that's going to be optimized around, when I say optimized around you, if my spending pattern is that I go to Starbucks once a day, and just basically using Starbucks as an example, because we always pick on it in finance because of the latte factor. And I am better off leaving money on deposit at Starbucks because of the amount of stars I get, which then technically is which is technically going to save me more than the interest I would get at the bank. Why wouldn't I hold it there?
So I'm glad you went there, because that's exactly what I was hoping you were going to say in terms of where we would be 500 episodes from, or 250 episodes from now. In the sense that the bigger companies, the Amazons, the Apples, and I wasn't thinking Starbucks, but you're absolutely right with the deposits they have. I was exactly wondering if that's where you see the future, given where, like I said, the buy now, pay later, the entrenchment of credit cards or deposits. We even talked about Google before, just because they know so much about us already. They could easily enter the space and start offering financial services, and there's some that say that the banks, the incumbents, are actually at a huge. Well, they're ripe for the picking. These guys.
Well, here's one for you. I mentioned Dennis previously, and I was visiting with him up in Ottawa a couple of weeks ago, and his entire thesis is that, as far as he's concerned, he must be. These tech companies are probably just doing the government a favor by not getting involved, and the institutions a favor by not getting involved. Because imagine Google basically giving you every financial service for free and monetizing out the data. Yeah, that should scare the living crap out of every executive in every sector of finance today. That's the reality of it. Now, do I believe that antitrust regulation will come into play before then? Probably. Do I think that these institutions want to be bogged down by something as arcane as banking regulation? Probably not. They do not want to do that. But nevertheless, with the right partners, it becomes possible. I mean, Apple's partner in this, and a lot of this stuff has been Goldman Sachs through Marcus, their online bank. So, they may be the front end, but they're not dealing with the heavy lifting and the adjudication and all this other stuff. That's someone else. So there's a lot to be worried about in regards to that in this world. Now, do I think that's going to happen? No, because no one, I think if Google and Apple and Microsoft and Amazon all became financial institutions and started hamming all this stuff out for free, then we've slowly started the end state of a corporate end game that is not going to look pretty and is going to be written about by science fiction authors. But no, it's an incredible opportunity and potential for someone to get this right.
Yeah, that part of it actually scares me. I'm glad you raised the regulatory aspect of it, because just the fact that the big guys entering the space and doing what they can with their data, that'd be a scary environment. So coming to the end of the chat today, we've talked about what the last 250 episodes has meant for you, but how has it affected your business?
So it's interesting. So people are like, oh, how much money are you making off this? And the answer is indirectly lots of stuff. It's indirectly monetizing in a lot of ways, right? So I've got 2 podcasts now. I also started one called Financial Planning for Canadian Business Owners. Combined, when you add the 2 together, I've done almost 350 podcast episodes. So it's starting to get up there. So in terms of the fintech impact, how has this changed me? So it's paid for itself in free software alone for me to trial and give feedback to various people. So that's been valuable. It's been a wonderful tool for building a larger community of advisors around the country. So I've gotten to meet a lot of people who know me now just because of I've become a resource to them. It's also become, it's led to a couple of leads, yes, but it's also become a validator for any client who works in technology who's looking for an advisor. I can speak a language they understand. And lastly, I think most importantly, when it comes to all of this is, well, not most importantly. So, and lastly, I've also benefited from the fact that I've been asked to join advisory boards, committees, and basically, I advise several fintech startups now. Some of them more mature than others, some of them very early stage. So it's been, one of them's exited. So it's been, you look at that one exit alone and it paid for the cost of operations and all the out-of-pocket costs from day one. So it's been fun. And it's also helped build my network immensely. I mean, there's almost no one I'm not to say almost no one. I know people at almost every major player out there now. So I can very easily pick up a phone, send an email, and pick their brains or get a response.
And from the other side of your podcast, as a listener, I'll tell you that I've learned a lot myself. I've learned a lot about different providers of different softwares that I had never heard of before. Like you mentioned Cinchi earlier on. I was blown away by their technology as well. But then again, some of the technologies that you've introduced, I'm in awe. I'm in awe at how many different products and companies and strategies are out there. And I'm just amazed at how much, what the future holds ultimately. So I just wanted to give you a congratulations from me. Hopefully I'm speaking for other Canadian financial advisors that you're providing a great service to us, because you're that one resource we can turn to find out about technology in the space. And yeah, you are that beacon of light in the Canadian space.
Thank you, sir. Really appreciate it. Not just in Canada, but there's half my listenership's in the US, and I thank you for that.
Yeah, you're worldwide. So even though we're Canadian based, your listenership is worldwide.
It is. Anyway, Guy, thank you so much for taking the time for this stroll down memory lane and talking about the future. I sincerely appreciate it.
It's always fun, and I always look forward to the notifications when your new podcast release. So thanks, and keep up the good work, and we'll look forward to the next 250.
Excellent. That was today's episode, number 250. We'll see how much longer I keep this going. It can be quite the labor, but nevertheless, it keeps me constantly engaged, and I hope you've enjoyed the journey. As always, if you enjoy this podcast, please leave a review on Apple Podcasts, SoundCloud, Stitcher, Spotify, wherever you get your podcasts. And until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.com.